Good morning. I'm Peter Milios from the Finance News Network. Global equity markets were lower overnight, despite worries about the crisis among US regional banks quietening, thanks in part to policymakers' efforts to alleviate the challenges, and investors' fear that higher rates could push the economy into a recession came back into focus. Overnight, the Nasdaq Composite fell as an uptick in rates put pressure on the tech-heavy index. The tech-heavy index shed 0.5%, while the S&P 500 fell 0.2%. The Dow Jones Industrial Average lost 0.1%. Behind the numbers, the real short-term emerging thematic once again is lithium. On the ASX yesterday, the battery metals sector surged after Perth-based explorer Liontown Resources rejected a $2.50 a share takeover bid from the US commodities giant Albemarle. This put a massive short squeeze into play as hedge funds chased to cover short positions across the lithium sector on the ASX. The market has been happy to short ASX explorers and long producers. This has also played out in the US overnight. Shares of US small-cap lithium miners are soaring in response to the Albemarle news. Shares of Piedmont Lithium, Lithium Americas and Sigma Lithium are up 6.9%, 4.1% and 9.9% respectively. And the US and Japan have agreed to strike a deal on critical mineral supply chains and to expand access to respective tax breaks. The deal also aims to counter China's dominance in the electric vehicle battery sector. EVs, which will use materials collected or processed in Japan, will be eligible for incentives under the US Reduction Act. And Standard Lithium shares were up 15% on Tuesday after the company said it had sampled the highest confirmed lithium grade brine in North America. The near commercial lithium said the grade of 634 milligrams per litre lithium in brine used for direct lithium extraction has a meaningful impact on both capital expenditures and operating costs in connection with the extraction process, with a higher grade typically resulting in lower overall costs. In tech news, Alibaba shares rose 14.3% after announcing it will split itself 6 ways. The Chinese internet giant said it will divide itself into core businesses, including artificial intelligence and e-commerce, and each can pursue independent fundraising and IPOs when they are ready. The announcement came after Jack Ma, Alibaba's co-founder, reappeared in China, signaling that regulators there may be easing a crackdown on technology. Overnight, S&P 500 sectors were mixed. Energy was the best performer, whilst communication services was the biggest laggard. The SPI futures are pointing to a 0.4% fall. Thank you for listening.